Fed up with the Fed. Hey, it's Eric Osnes here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending September 23rd, 2022. Well, it's another tough week for bonds thanks to the Federal Reserve, due largely to them. On Wednesday, the FOMC hiked short-term rates 0.75%. That was expected, and bonds initially rallied, pushing mortgage rates lower, but it didn't last long. It's typical for a Fed hike to lower mortgage rates because raising the Fed funds rate is seen as combating inflation, the arch nemesis of mortgage rates. What wasn't expected was the rout we experienced Thursday, pushing rates to their highest levels in over 14 years. There's many explanations for the sell-off yesterday, but none of them alone can really account for such a severe clobbering that we took. I follow a ton of different economists, and none has offered any clarity at all about yesterday's events. I'm still holding out hope, though, because the bond market is clearly oversold at this point, and that usually leads to a pullback. In fact, so far here on Friday, as of this recording, bonds have started negative and then turned around, and they're neutral, slightly positive as I record this. But as the saying goes, never trust a one-armed economist, because it can't say on the other hand. For the week, mortgage rates were sharply higher. Here are the national averages. A conventional 30-year fixed rate loan, 6.62%. That's up 0.29 from last week. 15-year fixed rate, 6%. That's up 0.45 from last week. FHA and VA 30-year fixed rate, 6.2%. That's up 0.6 from last week. And 30-year jumbo fixed rates, 5.95%. That's up about 0.3 from a week ago. In other news, if you are thinking about HELOC, lock in a fixed rate HELOC, and I'd suggest you do it now. With these Fed rate hikes, the Fed raises the federal funds rate. Federal funds rate is a benchmark used mostly for short-term loans, things like credit cards, car loans, and also loans that are tied to prime rate, like a lot of home equity lines of credit, HELOCs. The rates on all of those are going to go higher. If the rate on your first mortgage is nice and low, we've got a lot that are in the high twos or low threes, but you need to tap into your home's equity, a refinance may not be the perfect option right now. Sometimes it is, but many times it's not. But a fixed rate HELOC may be a good choice. Fixed rate HELOC will let you tap into your equity. You can consolidate credit card debts, any other debts, do remodels, just about anything you can use those funds for. So they can be super helpful without having to sacrifice the low rate you've got on your existing mortgage. And if you already have a HELOC, but it's a variable rate tied to prime rate, expect that rate will go up another 1 to 1.25% this year. That's per the Fed. That's what they said this week. You may be able to convert your existing HELOC into a fixed rate, though, with your existing lender. If you do, your payment will still go up because most of those conversions will switch you to a 15-year fully amortizing payment. So, not the interest-only payment that you're probably currently enjoying. If you're not sure what you have, give me a call or reach out. I can take a look at your documents and just give you an honest opinion, tell you what you do have. But if a fixed rate loan and a longer amortization is appealing, give me a call, because we do have a fixed rate HELOC program with terms out as far as 30 years. And our program uses blockchain technology, which means we need very little, if any, documentation at all. It's all done through the black box, and we can close in as little as 5 days. I'm available to answer questions on these or any other tough financial scenarios or story problems. Just reach out to me. You can call me 206-915-3742. That's 206-915-ERIC. You can email me, eric@ericismybanker.com. Be sure and watch for me on social media. Just look up Eric is my banker and you'll see me there. Be sure to subscribe to my YouTube channel so you can get weekly updates on what's going on in this economy and with mortgage rates. It's a volatile time right now. Hang in there, though. It's going to get better. It just might take a little bit longer than we were initially hoping. That's all I've got for this week. I hope this information is helpful, and I'll talk to you next week. Have a great weekend.